other room. Hope everybody's having a good start to your day. We're going to be watching NVIDIA pretty much all day. So once again, make sure you get your volume weighted average price charts up and ready for a very active day over the next 2 days. Good morning, Randy, Bogey Trades, and Bill Taylor. Thanks for joining us this morning. All right. So, little artwork change. Very exciting. We'll talk about momentum. We'll talk about the top stories and tickers. You'll have the runner at 9 a.m. And one last thing I want to talk about today. If it is too good to be true, it is. You'll find out what that means at about 9:10. But stick around for the runner, top tickers, etc. Coming up soon. Again, why you join us. If you are entering this market at 9:30 without any preparation, you are someone else's exit liquidity. So again, we'll talk about the stocks that are worth engaging and trading today. Whether this market is even safe to trade or if it's a trap day, it's fine. You can trade it. It'll be fine. Exactly where the smart money's positioning and our top screens, which we'll dig through at the end of the show as well. Right now, every day we get up and we analyze momentum in the broader market. Effectively, what we're doing is we're looking at stocks in very specific breakout territory versus stocks that are in breakdown territory. We subtract the number of breakdown stocks from the number of stocks that are breaking out. It gives us a positive or negative number. If that number goes negative, we turn over to see where the leverage is in the system and whether or not leverage at the top of the S&P 500 is unwinding, which is evident in the FNGD. This is a leveraged inverse ETN. I'm not going to ask you to ever trade it. I'm only going to ask you to watch it, because when we break above that 50-day moving average on the FNGD, there's something wrong in the market. You'll also notice the same thing goes with the UVXY. When we break above the 50-day moving average on the UVXY, something troubling could be happening on the horizon. So always pay attention to these key moving averages and always be watching out to ensure that you are protecting yourself. And also, another important thing to keep in mind, simply because you have this right here, this is a very good tool to use when you feel like it is time to go over the wall and start shorting to the downside. FNGD over the 50-day moving average. If it is not there, don't be shocked if these markets continue to burn higher because of leverage and continued crowding in the Magnificent Seven stocks that continue to lift the S&P 500 higher. On momentum, very important. It was not too long ago that the Russell 2000 had been breaking down. Just take a quick look at the IWM really quickly. And as you can see, as we pushed back off that 50-day moving average and now rising, continuing to move higher, there is a lot of money flowing into stocks here in the Russell at the moment. We had some big moves yesterday with companies like UP, Wheels Up Experience. Don't know what you do, just know that you broke your 20-day moving average and you have a relatively small short float. Absolute rip yesterday. VeriSign, same thing. Or Veritone, forgive me. Veritone had a nice little pop yesterday. We saw CCLD have a nice little pop. CareCloud pushing higher yesterday. And PAC, which is a name that I have not seen in a while. Ranpak Holdings had a nice pop. That is coming back to earth. Not a lot on the downside. On the upside on the S&P 500, though, we'll talk about those breakout stocks momentarily. Really, the only stocks that continue to show weakness are things like Moderna. And Moderna has been a short of mine. And again, I talked about how I had made a huge error buying a put and getting assigned the stock for negative a couple hundred shares. And then we had this pop and I had to cover. But really not a whole lot else really breaking down at the moment as we head into earnings. All 11 sectors are positive right now. Huge reversal from where we were just 2 weeks ago after that Fed meeting. All right, big news today, as you can expect. It's NVIDIA. It's all NVIDIA. It's all we're going to talk about. We're going to talk about NVIDIA so much, I have to stay after work to talk about NVIDIA. I will be here at 4 o'clock today to chat with Gianni about NVIDIA earnings. And this is one of those days where you have to remember that there are tons of stocks that are correlated. There are tons of proxies on this. And what's absolutely wild about NVIDIA is how financialized this stock actually is. It's absolutely insane to me to know that there are apparently over 1,200 ETFs that own this stock. I thought it was only like 500. No, it is over 1,000 now, according to Google. 1,200 ETFs with over 750 funds now counting NVIDIA as its top holding. This doesn't feel like an investment. It feels like a hostage situation. Now, why does this matter? Because, again, passive investing provides a floor for a lot of stocks, particularly at the Magnificent Seven. When you have this many ETFs, what happens is that wherever the stock moves, if the stock goes up, the ETFs have to buy more of it, because if it's especially if it's reflecting the S&P 500, it has to stay in line with the weight of the S&P 500. So again, ETFs must continually buy more of it to maintain their tracking. If the stock goes up, they have to buy more to rebalance. If the stock goes down, they still have to maintain that weight. This is a perpetual motion machine, and instead of this violating the laws of physics, it's basically violating the laws of common sense. But it is a reminder that so goes NVIDIA, so goes so much money, so much of this market. Now, there are lots of stocks that are correlated to this. There's plenty of leveraged ETFs, and we're going to get to the point later this year, early next year, where we're going to have same-day, zero-date options on NVIDIA as well. So if you think it's crazy now, just wait. NVIDIA, AMD, Taiwan Semiconductor, XOXX, and Tesla. Now, I want you to pay very close attention to another little tool of mine, the SOXS. The SOXS is the inverse ETF for bearish ETF for semiconductors. And as you can see, not a lot of good things happen above that 20-day, 50-day moving average. So if we start to break at any point on this level, NVIDIA, AMD, all of the major players will see the same type of pressure. What you're seeing when this happens, again, is an unwinding of leverage in the system due to something happening at the liquidity level. NVIDIA otherwise does not really break down. I don't think that anyone even really cares about what the numbers look like today, but NVIDIA expectations, $1 per share of revenue, $46.2 billion for the second quarter. That would be a 49% jump in earnings and a 53% surge in revenue from last year, which in any other normal universe would be absolutely spectacular. But this is a fever dream, everybody. Got to keep this in mind. Anything less than doubling your money every quarter for a company like NVIDIA is considered a disappointment. And that is why it gets so many comparisons back to some of those names like Cisco during the dot-com boom. The real drama will center around China. The Trump administration has been playing this game ping pong with the semiconductor sector for the better part of the last year. They first banned chip sales to China in April, then they lifted the ban in July, and now they're demanding effectively a 15% cut of any sales as if they are in The Sopranos. NVIDIA expects this to cost them about $8 billion this year. So a lot of focus on the politics. Markets are bracing for significant volatility. The expectation, I think it's about a $240 billion move today in expectations in the options market. This is the market, right? It used to be so goes GM, so goes the market. Then it became so goes Apple, so goes the market. And now it is so goes NVIDIA, so goes the market. So back today, 9 o'clock, I will be back with, 9 o'clock, 4 o'clock, I will be here with Gianni. I'll be doing my usual hour to wrap up the day. And then we're going to go through earnings and talk about how to trade this tomorrow. I continue to implore you to watch volume weighted average price. If we see a blowout in the deviation lines, you're looking for a move down here. If the stock sells off tomorrow or even today, and you get down into that 4 standard deviation, that's where you're looking for a rebound in the stock, because algos will start to cover. This goes back to the Stanley Druckenmiller conversation that we discussed not too long ago. But again, Druckenmiller in 2018 saying that so many algos are based on standard deviation patterns. And resultantly, when you get down into this 3rd or 4th standard deviation, you can't follow trend and try to short, because what's happening is they're stepping in and they're covering, and all of a sudden you will have these melts back up. So trade the Friday, and if you do get a chance, if we find ourselves in a situation where this sells off very abruptly, buy the in the money call for Friday, short duration. So 178 would have been an example yesterday if we had hit that. and you're just looking for a bounce back. And I know that a lot of people have been starting to utilize this bounce back strategy. Keep your stops very tight. And again, you sometimes it'll hit, sometimes you'll lose 10, 15%, sometimes you'll make 200%. It's just a matter of what the market does. You do not have control of that. All you can do is take advantage of the setups and what the market is giving you. 5 minutes before we get to the runner, again, political pressure on the Fed side. This story with Lisa Cook is going to continue to be a story. It's going to continue to dominate. Now it's starting to spill into the political analysis, right? The MSNBCs of the world. Everybody is now suddenly an expert. Everyone, everywhere is suddenly an expert on Federal Reserve independence. But keep in mind that only 6% of Americans actually know what the Federal Reserve actually does. And I would say only 1% really knows what they do. Remember, the Fed mandate is to contain inflation and to maximize employment. That's the dual mandate. The third mandate that nobody really talks about because it's not official is to consistently provide a backstop to the US dollar in the global markets. Now, that is shifting right now. And that's kind of where we are as we move into this mercantilist political economy world in which we're operating now, where the U.S. government is buying stakes in companies. Now they've taken over Union Station in Washington, D.C. They're going to solve all the problems through the power of the government, I guess, and we'll see how that goes. But again, investors are digesting President Trump's move to remove Fed Governor Lisa Cook. Expectations now, Trump will obviously replace Powell next year. The market will start to increasingly price this in over time, and that is where you start to get very aggressive expectations of rate cuts heading into next year. Now, why is this important? It's important because rate cuts, the reduction in U.S. rates, increases the leverage multiplier in the repo markets and impacts the amount of money that can be borrowed. That leverage is bullish for the U.S. equity markets. So as we head into next year, look at where we are in December of next year. There are people pricing in 1.75%. Okay? First off, that's going to cause inflation, full stop. But they're choosing inflation over, they're choosing to let inflation run. They want to try to maximize the employment side, and they're going to try to refinance the United States debt. We have a significant situation with our debt, obviously $37 trillion. We're adding about $1 trillion every 300 days. So, yes, they do need to refinance this. They do need to find a way to do it. The question is, who's going to want to buy it? And that becomes the big question. Are foreign governments going to want to buy U.S. debt down at that 2% level when they know there are inflationary concerns in the future? How are we going to try to do this with the basis trade? How will we do this with the Genius Act? It's going to be a challenge, and it's going to create volatility, and it's going to make this market very, very difficult to navigate because we really haven't seen it before, but that is why we're here. So we'll continue to be monitoring this. Expectations, again, for next December is somewhere in that 2.75 to 3.25 range, which, again, that's aggressive from where we were. Remember, back in 2022, Powell said that we wouldn't get inflation under control until 2025. We're in 2025. Now Powell has said we won't get it under control until 2027. If we start cutting rates, the expectation is more inflation. How do you protect your money? Well, again, that goes back to the next 36 months, that story that I had written over here at TheoTrade, and I'm going to share this in the chat with you right now. This is a sovereign model. This is a different way to look at markets moving forward. That one dude said the repo is drained. Well, again, reverse repo. Reverse repo. Going the other direction, Hashpipe. All right, last thing before we get to the runner is just India. Again, geopolitical, dominating everything. INR, RSX, commodities, oil, XOM, CVX. The U.S. doubled tariffs on certain Indian exports, citing geopolitical strategy. This can lead to, again, those jitters, those headlines. I continue to go back to the IIF because, as I've said, I am bullish on India for the long term, but this obviously can sell off And if we see continued weakness here, a move back down here to 26 is definitely back in the cards. I haven't looked to see what type of options are built around this, but I would say if you're looking for a trade setup heading into next week, look at the Indian companies, look at Tata Motors, look at everything else. These types of short-term moves lead to two things. One, shorts start to pile on, and then secondly, people take profits after a big move that we had in April. This was a sizable move for the Indian ETF, sizable move for this closed-end fund IIF, and I have not seen a lot of insider buying on this in recent months. Who is the best in the world at ping pong? That sounds like a chat GPT question. So let's find out. Searching the web. It's 9 o'clock. It's time for the runner. Modern ping pong, Na Long, widely considered the greatest ever. He is the only player with 5 Olympic gold medals, 3 world titles, and the longest tenure at world number 1, plus a total of 14 world titles across events. See, look at that. Now that's information you can use on a trading day like today. 9 o'clock means it's time to talk the runner, and we only put 3 of the names on the screen because I want everybody to get in here and download it and read it, right? But we'll talk about opportunities as they're emerging right now. As we look at this, give me one moment. Mr. Scott, where is it? There we go. Okay. So click that, and you have GEV. All right. So this has been an absolute personal favorite since I went out to Utah and saw the geothermal build out that has been transpiring with a company that is basically powering the earth, powering cities with geothermal energy out in southern Utah. This is a nice, solid run, and we had a little bit of profit taking. We're popping back above that 20-day moving average, and this is where I get a little excited because, again, you're starting to see the reduction on the MACD. This histogram is starting to narrow, looking for a positive switch now on that MACD. ADX, same thing. This is a relatively clean trade if you're just going to go out 2 to 3 weeks. So this is going to be impacted by NVIDIA. Everything's going to be impacted by NVIDIA. But the fact that momentum remains very strong on this name gives us an opportunity to make a relatively cheap, easy trade built around Genova. This is a spinoff of GE on the industrial side, and this is going to take its sweet, sweet time loading. But again, always go to Option Profit Calculator and make sure you know exactly what it is you are buying and bidding on. And we could go out to next Friday and keep this relatively simple. You want to stay, they've got earnings coming up, obviously. Look at that. Oof. Let me see when earnings are. GEV earnings. Oh, 22nd. Okay. This is just volatile. Okay. Now, this might seem like a very expensive trade, but everything does, right? 628. Buy in the money. Sell out of the money. Very widespread. Ooh, I don't like that. Let me see what we can do. GEV. Leveraged ETF. See if there's a GEV. There is. There's a GEVX. All right. See, this is wild to me that all of this stuff exists. We literally just launched this. Okay, so here's your trade. Buy the GEVX. And if it falls under its 20-day moving average, EMA, right? EMA, dump it. This is a double leveraged ETF, and you're looking for a 2-3 day trade on this, looking for a little bit of a rebound. Not an options opportunity here. GEVX is a double leveraged, and we're simply looking, again, I recognize the danger in trading some of these names, but you're going to set it right back at your 2-day, at your 20-day moving average. So GEVX for those who are brave, and also recognize that you can trade this with volume weighted average price. GEVX. double, there's going to be an ETF for everything. It's going to be utter madness. I've said this time and time again. This is what our engineers are doing these days. We don't build bridges. We simply create double leveraged ETFs, triple leveraged ETFs. Next on the list is Amazon. And Amazon has moved relatively nicely off of that sell-off that we had to start August. A nice move back up to around 236 feels back in the cards. So same thing. There's double leveraged ETFs around Amazon. Amazon's going to give you a lot cleaner of a trade here. And once again, this is a stock that when it dives off the diving board with the rest of the market, when there is massive levels of insider buying and we see a policy change, Amazon is always a buy. Now is not the time because of that. But again, you saw the sell-off. We had the momentum switch happen back on February 21st. This had already been selling off. We had that squeeze. We had that dump. Then we had insiders stepping in and buying on the 9th. And then we had the policy shift. Momentum caught back on April 23rd, off to the races. This is another example of the 1% pattern that I've talked about in the past. Now, simple trade on this is you're just staying in the money and you're at 227, and then you are going to sell out of the money at 232. And again, I did say that I was looking to go back up to 236. Remember, if you're selling the 310, you're going to be able to keep everything up to 235.60. So this is the trade. In the money, it's going to cost $240, 227 call. Selling the 232.50, 45% probability of profit, looking to make 100%. And then how do you exit this trade if it does go sideways? Well, again, at 226, that becomes your exit point. Now, here's where you are. This is your downside, right? 20%, 23%, 25%. That's the sweet spot. Because, again, I'm always willing to lose $1 to make $2. You're going to have a little bit of duration in time on this, but relatively clean trade here. Just keep a tight stop right back at that key moving average and make it a mental stop as well. As the 20-day moving, as the stock trades where it is, the 20-day moving average is likely to continue moving higher with it. All right, on top of that, what else do we have? ULCC. I'm amazed by this name. I'm amazed that Frontier is getting the momentum that it is. And this is actually a pretty wild story. Frontier is going after Southwest. They're going after them. They're moving in on their routes right now. This company I thought was bankrupt, but it turns out that was Save. It was just a different airline. 200-day moving average as your line in the sand. And let's see if the momentum continues. You have a strong RSI, strong MFI. It's not getting a big convergence or a big move on the MACD in any capacity. But this is a pretty simple thing to trade. I like just buying the stock and keeping it back at that 20-day moving average. This is one of those noise plays, right? Because, again, it's a discount airline going after Southwest at a time that Southwest is under a lot of pressure right now. Oil prices remain subdued, not worried about the hedging side of this, just trying to play the momentum and keeping a tight stop. It's not that complicated. Either it's going to break out or it's going to just kind of roll over and you're going to keep a tight stop and you see where we go from there. On the downside, you have Salesforce. This is just the story of the economy. Now, I always joke that liquidity is what matters most. And I joke that the economy doesn't matter as much as it used to. But CRM is showing you the concerns around the job market right now. You're seeing software application stocks get crushed, and they continue to showcase that, yes, we have employment situation problems on the horizon. What's the downside? Well, again, you're under the 20. Trying to hold that MFI, it's just not there. Simple trade, spread to the downside. Stay here at the money, sell a little bit out of it, and then, again, if it does move a little bit higher, all you do is you cut your losses and then trade back above the 20-day. And then if we get back above the 20-day, you buy at the 20-day and you sell at the 50-day. CBOE is under pressure. Didn't see this one coming. This is actually pretty wild to see because CBOE has done what it's done this year, right? A nice move to start the year from 190 up to over 250. Weakness under this 50-day. If we're going to try to trade this, I actually would. This is one of those situations where I actually would be looking to do a strangle here and sell on the outsides and try to see if the stock just trades sideways for the better part of the next couple of days. This stock could have significant downside, though, in the event that NVIDIA misses today. So pay very close attention here. You would think that CBOE would be doing well on a day like today, but it just showed up on the screener today. You could see negative move on the MACD, weakness on the RSI, weakness on the ADX. So at worst, a move down to 240. If we get under that 50-day moving average, that's where I'm looking to go to the downside, and I actually may stay just a straight put to see if we get into September. Historically, for September, it's actually held up pretty well, but as you could see, it has dropped. It's had these moves, 10, 15% moves over time. CBOE and then Lazy Boy. Again, nobody's buying furniture right now at all. Okay, so we had that nice pop that came off of that. We had an earnings date. We had a lot of covering, and then we came right back up to that 20, and we started to roll back over. So if we hold up to that 37 level, that's where I'd be looking to continue for weakness to the downside as well. And then on momentum, it's gold. It's all gold all the time. And as I've said, 4,000 is my target in the next 12 months, and then we start going higher from there, much higher from there, largely on the back of concerns around the U.S. dollar and ongoing debt concerns. Other names to watch today: Ken, right? Ken and Holdings. We talked about this on the nice little setup that we do with F and Graham scores stocks. This is a pretty wild company as we dig deeper into it. It's got a lot of influencers. We had that nice move off that 20-day moving average that took us much higher, and we're kind of chopping around right now. This is one of those names that, and you see this move right here on the MACD, I could see a nice move back up to around $50 relatively soon. If you like Peru, you'll love whatever. My Spanish is not that good. Compañía de Minas Benaventura S.A. Ediar. ¿Es bien, gracias? Sí. ¿Dónde está la biblioteca? Okay. And then you have NC, which is NATCO Holdings, which is also a coal company. And I'm seeing a lot of bullish sentiment around coal. So again, 20-day moving average looking to the upside. Breaking out industrials, technology, materials, breaking down defensives, and rotation, that concentration into small and mid-cap stocks. Es bien. ¿Sí? No lo sé. Yeah, I should host a show entirely in Spanish. No one would watch it. All right. Last thing today. And this is a lesson for traders. This is a story that I think just needs to be told because it's so fascinating. You have to remember that if you go on Reddit or you go on any of these other sites and you're looking for ideas, you're going to see something every now and then like an ESSA Pharmacorp. And you're going to think to yourself, there's free money to be made. And there isn't. I'm going to write about this today, but this company is a biotech company that created the single most expensive punctuation error in, I think, maybe market history. I've never seen this story before. This is a failed cancer drug company. And it actually has shown up on a lot of screeners that I've had going back to the last 2 to 3 years. This was trading up around the $30 level. Trials continued to fail. It just wasn't doing well. And basically, you have a lot of pharmaceutical companies that are struggling in the high interest rate environment that they are just saying, you know what? We're going to unwind all this. We're going to give up on our trials. We're going to return our money to our shareholders. And that's where the problems start. They wanted to return $80 million to their shareholders, so they announced that they were going to do a one-time cash dividend of $1.69. And the reality was, what could go wrong if you're just returning your cash to your shareholders? The answer is everything. The company announced on August 14th that you could buy shares through and including August 25th and receive the dividend. But it also said in their statement that August 25th was the ex-dividend date. And for those who are keeping score at home, ex-dividend means without dividend. You cannot receive the dividend and receive the dividend on the same day. The dividend was supposed to be paid on August 22nd. Common sense suggests that if you buy shares after the money has already been spent, you won't receive the money. However, the press release actually said through and including August 25th. So August 25th, this past Monday, all hell broke loose. You can see where volume was when the day started. We opened the day up in the around the 70 cents level, and it was either worth 25 cents, just the stub company, or it was worth $1.94, adding the stub plus the dividend. There were 178 million shares traded. There was $100 million changing hands based on different interpretations of a typo. The average volume before this day was 250,000 shares. That's how much it went up to 4.8 million. One press release created 700 times the normal volume. Half the market thought they were buying $1.69 for 73 cents. The other half that they were selling a worthless stub company for triple its value. Also free money. And since nobody could be right, they had to suspend trading for 5.5 hours and figure out what they meant by their own press release. In the end, the buyers were wrong. No dividend, just an expensive lesson in reading comprehension. Someone typed through and including August 25th when they meant through and including August 22nd. 3 days, one typo, $100 million. $100 million in confused trading. And nobody at the company caught it. Not the NASDAQ, none of the lawyers, none of the bankers, none of the advisors. The entire financial machinery that is supposed to stop this failed because no one could count from 22 to 25. Buyers thought they had free money. They lost 66%. The sellers thought they were being clever. They accidentally won the lottery, that they didn't even know what they were playing. The ESSA clarification came way too late, end of the day, and they came out and they said, well, we inadvertently stated the correct due bill period was in fact August 19th through the 22nd. Everyone is getting sued. The buyers have a claim. The sellers have a windfall they never should have deserved. And the lawyers are going to make more money than everybody combined. This is a very important lesson about financial markets. When you hear, don't get caught up in things. I've seen this happen a few times with SPACs. I've seen this happen a few times with names like this. Make sure you know what you are buying at any given moment. When you are going to do a spread, make sure you are, if you're bearish on something, make sure you're not selling the more expensive put and buying the less expensive put, which is a totally different trade than buying an expensive put and selling to the downside. Double check everything. Read everything. And if it is too good to be true, it usually is. This is a very expensive lesson for a lot of people right now. Now, I'm not a person who likes to trade all these wild derivative things, and I get excited from time to time when I think that there's free money to be had. But the reality is, some people got blown up the other day because they got greedy, and they ended up losing 66%. And I know somewhere, there's one guy, two guys, three guys who literally thought this was the lottery for them, that this was it. And they put everything on the table. And now they got crushed. And now the question is, are they even going to be able to afford a lawyer? Always be cognizant of what it is you are trading. Always be aware of what it is you are focusing on. If it is too good to be true, as Walter is saying, it usually is. Okay? Last thing real quick before we go, just to give you the breakout stocks, breakdown stocks on TradingView. This is just our screener on MFI, RSI, MACD, and ADX. Walmart rebounding a little bit. Forgive me, that's the breakdown screen. Breakout stocks, XOM, FCX Materials, MPC, that's Marathon, BXP, MMSI, and Enphase continuing to bounce back. Don, you're absolutely right. That is the most Robin Hood there is. It is 9:20. I'm going to be back at 4 o'clock today with Gianni. We're going to talk NVIDIA earnings. I'll be back at 3 o'clock today for my usual hour in the member room. If you're not a member, I don't know what you're doing. This is the single most important day to be a member as we all focus and hyperventilate over NVIDIA earnings, but also to learn how to trade 50 different ways and find the thing that actually aligns with your strategy, your risk tolerance, what you can make out of this market in the next 48 hours. On top of that, everybody just pay very close attention to anything that is related to earnings around NVIDIA. All these names like Tesla and AMD and Apple, they're all going to be on the move today. It's going to be a great opportunity and a great day to trade. Don's going to come up with some music in a moment. I hope you all have a great day. If I don't see you later today, I will be back at 8:45 tomorrow for Market Masters. Have a great trading session. Take care.